Welcome back to another video, everyone. So in this video, we're going to go over reading the tape. I'm going to break down what is tape reading, level 2 and time and sale breakdown, tape reading breakdown, and live tape reading. So reading the tape is a very, very important concept that you guys have to understand in trading depending on the way you trade. So first and foremost, what is tape reading? So tape reading is the art of reading each executed transaction and identifying if bulls or bears are in control. So if you guys take a look right here, this is the tape. So this right here is the tape. Now when you look here, the whole idea of tape reading is to look at these numbers, which I know look very complicated and confusing, and I'll break that down. The whole idea is to look at this and understand who is in control. Understand what will price do. Will price go up? Will price go down? And use that to our advantage as traders, right? So how does tape reading help us? So tape reading helps us identify who's more aggressive, buyers or sellers, which then gives us an edge on the short-term direction of the stock. So the whole idea of tape reading is we're supposed to use it as day traders or someone scalping. Now, if you're going into a trade for a long period of time, you're a swing trader, this will not really apply. This is primarily for someone trying to scalp or someone day trading, meaning you're in and out of a trade in seconds to a few minutes to maybe a few hours. So this is when tape reading becomes extremely effective. Right now, tape reading, the whole idea is when we look at the numbers, when we look at each and every single transaction executed, our job is to identify who is in control. Basically, will the stock go up or will the stock go down based on each set of information coming our way, right? So what does the tape consist of? So the tape consists of these two components, which you guys have maybe heard of before. First one is known as level 2, and the second one is known as time and sales. Once again, the tape consists of the following two. We have level 2 and we have time and sales. This right here is level 2 and this right here is time and sales. So we use these two together to read the tape. We use them together to identify what the stock will most likely do next. Will it go up? Will it go down? And that then gives us an edge on the trade. Okay, so now let's break down level 2. Let's break down all these crazy numbers, what they mean, and how we can use that to our advantage. So this is the level 2 as I just showcased. The level 2 shows us the full order book. It shows us the full order book where people are looking to potentially buy or sell the stock or the security, right? So we have something called bid. Bid right here, the bid price, is what people are willing to pay for a given security. So for this stock, stock Apple, right now, someone is willing to buy it for $243.42. The ask price is where someone is willing to sell it. So someone owns this stock and they want to sell it for this price. This is the sellers. So once again, the bid represents the buyers, which you guys should be familiar with by now, and the ask represents the sellers. This is where people are looking to buy. This is where people are looking to sell. And it doesn't have to be primarily people. Like I mentioned before, we're dealing with market makers. We're dealing with high frequency trading, a lot of algos. So it's not always real people. It's at times computerized systems, especially with a lot of these big stocks, right? Next, we have something called the spread. The spread is the difference between the bid and ask prices. So if the bid is 243.42 and the ask is 243.44, the spread is 2 cents, right? In this situation, the spread right now is 2 cents. It's 2 pennies. Now, sometimes the spread gets wider. Like let's say the bid was at 243 flat and the ask was at 247, right? At this point, the spread is not 2 cents. The spread is now $4. There's a higher spread. Now, obviously, we don't want to trade stocks with high spreads, and we have to be very careful because remember, with the market orders and limit orders, if you use a market order with stocks with high spreads, it is going to get you at the ultimate top or ultimate bottom, which is not what you want to do when you're trading. And then we have something called slippage. Now, slippage is the difference between the expected price versus the actual execution price. So, for example, if I want to buy 100 shares of stock Apple, right, And by the way, these numbers represent 100. So this is 100, 100, 100, 100, 200, 100, 100, 100, right? So it goes in quantities of 100. This two quantities of, this is 200, 100, 100, 100, 100, 300. So each number represents a straight 100, right? Now, let's say I want to buy 100 shares of stock Apple. I use a market order. Now, if I use a market order and I want to buy 100 shares of stock Apple, I have to buy it from someone that is selling it. So I would assume that I'm getting it for 243.44. Now, sometimes what the slippage showcases is this is what the ask is right now. But by the time I hit sell, so even if by the time I hit buy, right when I hit buy and my order actually executes and goes through the system, the actual number or the actual amount that I might get the shares for may not be 243.44. It may even be 243, right? Maybe 243.43. It might be cheaper, or it might be 243. It might be 243.47, right? Whatever number kicks in, that's the slippage. Slippage is saying I would expect that I'm getting it for this price, but I'm actually getting it for a higher or lower price. Now, some stocks, depending on what you're trading, have higher slippage, some have lower slippage, and paying attention to that right off the bat is extremely, extremely, extremely important. So that's that. Now, the way level 2 actually works is, and these are a few things you have to keep in mind, is you're not going to see the actual size on level 2. So right here, it shows someone wants to buy 100 shares at 243.42. Someone else wants to buy 100. Someone else wants to buy 100, 100, 200, 100, 100, 100, 100, right? Now, if you see, you'll probably be like, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's 1,000 shares. So you'll be like, wow. So if I purchase 1,000 shares, or if I sell market 1,000 shares, the order is going to hit 241? No. Let me rephrase that once again, because I know a lot of people got lost in that. If I hit sell market 1,000 shares of stock Apple, what this is showcasing is that I will get 100, 100, 100, 100, 200, 100, 100, 100, and I will drive the stock price down to 241 in one order. That's what this represents. But what you have to understand, and I went over this in the market order section and elaborating market makers, when you place an order, like if I place 1,000 shares of Apple, I want to sell 1,000 shares right now, level 2 is not going to show me all of the shares. Market makers are watching this, market makers are seeing. So if this order was to kick in and I was going and I was buying up all the bids and I was hitting each and every single bid here, what would happen now is that market makers would step up and maybe hold the price. If they hold the price, what may happen is I might get 1,000 shares at maybe 243.41, right? It wouldn't go to 241 exactly, because market makers aren't showing all of their size. That's something you have to keep in mind with level 2. If someone is buying 1,000,000 shares, they're not going to put it on the ask or the bid. Right? If someone's buying 1,000,000 shares, they're not going to put it in the bid. If someone's selling 1,000,000 shares, they're not going to put it on the ask. They're going to slowly get in, slowly get out, because they're not going to showcase their orders, because their orders, a large order like that may shift the direction of the stock and they may not be able to get in or out. So a lot of times what happens is when they want to get in, they go in with smaller size. And a lot of times, like I said, you're trading against market makers. You're buying against market makers. So they're not going to show their supply. They're not going to show their supply. But when you try to process a big order, you'll start seeing the orders kicking in. And that's where slippage kicks in. And slippage gives you a little bit of a different price. But that's only if you are using market order. If you obviously use limit order, the max you're going to pay is that limit price. So if I want to buy 1,000 shares at 243.43, the most I'll pay is this. Maybe with slippage, I might get some at 243.42, but the most I might pay is this. Right? That's the thing you have to understand. With slippage, if you use a market order, you might end up paying a higher price point. But if you use a limit order, you're fine. But with a big stock like Apple, if you process a market order, 1 penny, 2 penny isn't really going to kill you, depending on what you're trading and how you're trading, right? So that's level 2. It showcases us the full order book. These are orders that are potentially looking to get filled. They don't always get filled, and level 2 always gets Like a lot of times there's a lot of fake outs on level 2. I'll get to that in a bit. But what you have to understand about level 2 is just showcasing where people are potentially, once again, potentially looking to buy or sell. They might say, hey, I want to buy 10,000 shares at 243.42. Boom, never mind, I don't want to buy it. They can always take it on, take it off. So you need to keep that in mind. Now, the more important thing that we need to focus on is something called time and sales. So what is time and sales? Time and sales is an order log that showcases every executed transaction. So every trade that goes through is going to show up on the time and sales. So if you go tomorrow or the day after tomorrow, whatever the case may be, and you buy 100 shares of a stock or 1 share of a stock, whatever time you buy it, whatever price you buy it at, it will show us that at this point, this stock executed X amount of shares, right? So this is time and sales. Once again, it shows us every executed transaction. Now, there's a few components in here. First, we have time, right? The time is the moment the order executed. So here it says 11:14:11, right? This is saying at 11 a.m., 14 minutes into 11 a.m. and 11 seconds, the order executed. This is the order that executed. Now, an order executing, does it mean people bought or sold? So once again, if an order is executed, right, like this order executed at $242.61 for 120 shares, does that mean someone bought or someone sold? And that's a question. I want you to think about that. So this first one right here, this is saying at this time, 120 shares executed at $242.61. Does that mean someone bought or does that mean someone sold? The proper answer is it means that someone bought and sold. Because remember, a transaction includes a buyer and a seller, guys. Keep that in mind. If you said buy or sell, you need to go back to the basics. You need to go back to part 1, part 2. You need to start from the basics because that's not good right now. You should have known that, right? If you got it right, great. But the proper answer is this transaction at 120 shares at 242 represents that someone bought 120 shares and someone sold 120 shares, which both represents an executed transaction. Remember, a transaction represents a buyer and a seller going in and executing that full transaction, right? So we have the time. Next, we have the bid. Now, this is something I have on myself. A lot of programs, even TOS, doesn't have this on a standard way. So I'll show you guys how to apply this or how to set it up. But I have this set up on my own. So we have the bid and we have the ask. What this is showcasing is at this moment, at this exact moment, the buyers wanted to buy at 242.61. The sellers wanted to sell for 242.63, which represents the ask. The price sellers were willing to sell at that time. So at this time, this is what was happening between the buyers and the sellers. There's also a 2-cent spread. The price right here is telling us the price that the order actually executed for. So at this point, buyers wanted to buy it for 242.61. Sellers wanted to sell it for 242.63. The actual transaction happened at 242.6158. And the order quantity, which is a size, represents the quantity of shares executed. You can see 120, 6, 45, 240, 78, 100, 100, 200, 100, 1, 15. It's showing us each and every single transaction and the time. And the last thing we have is exchange, the ECN that's used, which we don't really need to focus on at the moment. But this is what we need to understand. We need to be able to read this, and I'll show you live examples in a bit. We need to be able to read this and understand who is in control, right? So in this situation, no one's really in control. Nothing really crazy is happening. Same thing here. Nothing really crazy is happening. Now, when it kind of becomes interesting is when a stock is at a critical level, right? For example, you see something like this, right? Let's say we look at this. In this situation, buyers are at 242.6, sellers are at 242.61, but look where the order executes. Order executes at a higher price. So these are things we need to look out for. Obviously, just seeing this one time is not a clear indication that's going to tell us, hey, we should buy or hey, we should sell. There's obviously more that goes into it, but that's what we're technically looking for. We're trying to see who is more aggressive. Are the buyers more aggressive? Are the sellers more aggressive? In this example, the buyers are more aggressive because think about it. The buyers, original buyers are looking to buy at 242.6. The sellers are looking to sell at 242.61. The buyers stepped in, or the order trend executed at a much higher price for a good amount of size. That's showcasing that buyers are aggressive. Same thing here. This is the bid, once again, where people want to buy. This is the ask. When the bid gets hit, right, you guys can see the bid is getting hit. How do we know the, I mean the ask is getting hit. When I say the ask is getting hit, I mean that the order is executing, this is the execution, at the ask price. That means buyers are aggressive. Buyers are coming in and saying, okay, what do you want for this? What do you want to sell it for? Sellers are saying, we want to sell it for 242.61. That's what we want to sell it for. And the buyer's like, cool, here you go. I'm not going to negotiate. I think that's a fair deal. I think it's a fair deal. And that, reading that is what we're kind of focused on. And obviously just reading one single line is not enough, and that's not going to show us anything. There's more that we have to read. There's a bunch of transactions, a bunch of orders, a bunch of sizes we have to put together to be able to identify who is actually in control. Now, when you guys are reading the tape, what you have to understand is you can't just randomly open up a stock chart and open this up and say, all right, it's going to go up, it's going to go down, it's going to go this way. It's not going to happen like that. What you have to understand is when you're reading the tape, there's certain areas you need to focus on that are going to give you a clear identification. Those areas are critical levels. Critical levels could be at a moving average point, a VWAP point, which I'll get into moving forward. It could be at a support, a resistance, anything that signifies where buyers may possibly step in or sellers may possibly step in. So in this situation, if you guys take a look, this would be a focus area, focus area, focus area, focus area, focus area. These are all the focus areas. Now, around these focus areas, we want to focus heavily on time and sales and level 2. We want to read the tape. We want to see, are buyers being aggressive? Are buyers stepping in? Are buyers stepping in? Are buyers stepping in? Are buyers stepping in? Who's stepping in? Are they aggressive? If buyers are stepping in, they're aggressive. That allows us to capture these moves, right? We don't get trapped. What happens with a lot of traders is they get trapped here. They think, oh, it's going to go higher. Oh, it's going to go higher. But people that can actually read the tape and understand the order flow, they understand that, okay, this is a fake out. This is a fake move. I don't want to get trapped into a fake move. So they're able to be more patient. They're able to wait. They're able to read the tape and get in better entries. So now if someone was reading the tape on here and they did a good job at it, they would have read that here there's a strong rejection, that it's not, the buyers are not being aggressive. They would be able to read that buyers are getting aggressive here, buyers retest, and then stock makes a move up. They would also be able to read that here as well, that sellers push the stock down. The same buyers that were here didn't show up at first, but they eventually showed up, which drove the price up. So these are components that you have to be able to read to understand how to read the tape, right? Now, obviously, if you try to read in between here or in between here, it's very hard to read these levels and predict what's going to happen. That's just not possible, right? Even reading here, it's kind of like what's going to happen now, right? That's where you identify those levels. Now, one thing to also keep in mind with tape reading is when you identify levels that get rejected, and I'll show you guys live examples, like this area is getting rejected, or this area is getting rejected or getting rejected, that's giving us confirmation that there's sellers sitting here. I want to see that. I want to see that there's sellers sitting here. A lot of people get afraid. They're like, oh man, it's getting rejected. Oh, it's going to fall. No, I'm happy that it's getting rejected. I'm happy sellers are putting up a fight. I'm happy bears are stepping in. I'm happy that bears, they keep stepping in. They keep stepping in because now I know what level to focus on. Now I know what level I have to pay attention to, and I have to watch the tape so I can capture a strong move. Same thing, sellers keep stepping in. It's cool, I don't care. Stock goes up, sellers rejected, strong move. Pullback, holds, continuation. Just watching this, guys, just watching it is allowing us to understand. Perfect. This is a level where bears are putting up a battle. Since they're putting up a battle here, it is now giving me a confirmation to watch this level. So when you see that happening, that's a good sign. Don't get afraid of that. Don't get afraid of seeing a level get rejected, buyers stepping in or sellers stepping in. That's a level where you can watch the stock now, right? Now, so how do we read the tape the proper way? Now, depending on what direction you're going in, you're going long or you're going short, right? There's a few things you want to look for. So if you're going long, you want to see the bids increasing. You want to see that the buyers are stepping in, buyers are holding the bid, right? Buyers need to be holding the bid, right? You also want to see that most transactions are hitting the ask. The transactions are coming in, they're hitting the ask, right? So for example, if the bid is at $10, the ask is at 11, on the tape, I want to see more transactions hitting 11, and then when it hits 11, I want to see the buyers or the bid increase. Now, obviously, it's not going to be a straight read where you just see this go from 10 to 1020 to 1030 to 1040 to 1050. This goes from 11 to, it's not going to happen like that. It's very messy, and I'm going to show you an example of that in a bit. It's very, very messy, and like I explained before, when I explain things, it looks like, okay, wow, this is very simple, but you have to understand, with the market, there's a lot of mess, right? So it's understanding the idea and everything behind that idea and then applying it instead of looking for perfection, because perfection does not exist in the marketplace. Okay. Now, next thing that you want to look for is that there's large transactions on the ask, right? So if the ask is at 11, and let's say the stock goes to, 1120. If it goes to 1120 and it breaks out of a critical level, and I see that the size on the ask or the size on the time and sales is small, it's 10 shares, 5 shares, 8 shares, 12 shares, obviously depending on what stock you're trading, I'm not happy with that. I want to see size. I want to see commitment. I want to see a lot of orders kicking in. That's going to show me that they are committed. Now, 10 or 20 or 30 shares on the chart may look like, wow, it's a breakout. Then other traders step in and boom. That's a failed breakout right there. Right? So understanding that whole concept is extremely, extremely important. Right? Now, another thing you want to see the time and sales accelerating, but price is going up. Right? So when time and sales is accelerating, and I'll show you what the colors mean too in a bit. When time and sales is accelerating, you want to see that the price is going up, and the price is going up with size. There's size here. You want to see the bid is being held. You want to see the bid is going up, and like I mentioned, it's not going to be a clear straight road up. It's obviously going to go up, come down, go up, come down, go up, come down, which is healthy, which is something we want to see. We don't want to just see a stock go from 10 to $12 in 2 seconds. We obviously want to see it, go higher, make lows, higher lows, and just keep going in a consistent pattern. That's going to give us more confirmation, right? Now, another thing you guys got to keep in mind on the short side is the asks are decreasing, that the sellers are lowering their sell price. So if a seller wants to sell something for 11 and he lowers his price to, let's say, 10.8, that right there is kind of like, okay, they're not able to sell the product, they're not able to sell the stock, they're not able to execute the order at what they want to sell for, so that means they're not strong. That's one thing we want to look for. We want to see a lot of transactions are hitting the bid. We don't want to see the transactions hitting the ask. We want to see the transactions hitting the bid. So once again, bid is at 10. The ask is at 11. Transactions go in at 10. And there's size, right? Remember, there needs to be size. And it can't hit 10 with 5 shares, 7 shares, 18 shares. And you're like, wow, it's going to go down. No. I want to see size. Depending on that stock, whatever the average size is of that stock, I want to see size hit the bid and constantly hit that bid hard and hard and hard. And when it hits the bid, I want to see the sellers get scared and say, okay, time to lower my price. And also, the bid starts getting weaker. Right? Large transaction on the bid. Another thing I want to see is I want to see the ask being held. I want to see that if a stock is trying to break a certain point, the sellers are still at their same sell point. The sellers or the ask is still at 11 because that's showcasing that they don't think they're going to get a higher price. They don't think it's going to go higher. They are happy to get out at 11. So I want to see the ask being held. The ask is being held. That is showcasing that there is probably a high probability that this might go down. But obviously, just looking at the ask itself is not enough. I want to see all the transactions going through, and I want to be able to read what is happening to get a higher confirmation. Next, I want to see time and sales accelerating, but price is going down. When time and sales starts accelerating, I want to see that its price is going down, right? And also there's other components we need to look at because a lot of people get faked out when they see time and sales go up or go down with green or red, and they're like, wow, it's going to break out. Wow, it's going to fall. There's a way to properly analyze that and read that, because seeing that time and sales is accelerating shouldn't give you the first gist to get in, but you have to be able to read the full picture, the full market structure to know that, okay, are sellers getting aggressive? Are buyers getting aggressive? If it's Are stop losses getting hit? What's going on? Because there's a lot of different components that happen that people get trapped in trying to read the tape and they end up messing up. Okay, now let's break down. Let's just break this down real quick. So once again, bid, ask, buyers, sellers, right? The whole idea is to see and watch this at critical levels. So let's say 243, and I'm going to show you guys a live example in a bit. 243.40 is a support level, very strong support level. Every time the stock gets to that support level, we want to see the bids hold. We want to see the bids hold. Now sometimes this might go to 39, it might go to 38, it might go to 37. Now when it does do that, what I want to see, right? What I want to see right here is right here, I want to see size. Now, if the size is immediate and it just starts going a lot of size and the price starts going down, sometimes I may not take the trade because that may be just stop loss is getting triggered, the stock is going up. Now, sometimes if the stock is selling off, because it also depends on the direction of the stock too, right? Because think about it. If a stock is going up and it's trading sideways like this, I wouldn't really be too much of a fan taking this trade opposed to taking a trade like this. This would maybe give me a higher confirmation. Not saying this is a bad trade, but it also depends on market structure and what's happening. Because if I obviously see a stock do something like this, right, I'm not really going to go with the idea that, okay, it's going to keep dumping. Yes, can it dump? Obviously it can dump, but also you don't want to get faked out on the first move down or faked out on the first move up, right? So I would want to see 243.40s hold. Now, if it goes a little bit below that, that's totally fine, as long as once it does go below that for a few seconds, the bid is able to pick up. If the bid is able to pick back up after it goes below that, and on the pickup, you see that the price is hitting the ask, right, or the buyers are hitting the ask with size, that's showcasing us that there's a high probability that this was a fake out. People stepped in, people stepped into short, or people stepped in to buy puts and make money on the downside. But we realized it's a fake out and we are going to enter and get in. That's number one. Number two is when you see time and sales, you see these colors. Now these colors throw off a lot of people. They look at the colors and they're like, okay, what does red mean? What does green mean? Right? Now green is just saying that the price that the stock executed at is higher than the last price. So you can see 242.63, 63, it's green. See all 61s, lower than this one, so it's red. 62, 64, higher than this one, so it's green. 61, lower than this one, so it's red. 61 and 62, higher than these, so it's green. Lower, so it's red. So that's what it's kind of showcasing. It's not showcasing, you know, if the stock's going to go up or down. It's just saying from the last executed price, what happened, right? Is the price going up? Is the price going down? And sometimes when a lot of people see a lot of red here, they're like, all right, I see a lot of red, short, right? That's where looking at the size and being a little bit patient is going to help, because this is what you guys probably see. And that's where you get trapped, because that's where market makers are, you know, triggering stop losses. Same thing on breakouts. That's why a lot of people, when they trade breakouts, they end up sucking on trading them because they're not focused on this. Me, when I trade breakouts, I'm watching this. I'm seeing, okay, a lot of burst of orders went through. I'm not as comfortable. Okay, the stock went up with nice size, nice order flow, everything was clean. Okay, I'm comfortable. Now, if I see a burst of orders go through, I'd want to see a pullback. I'd want to see that the sellers are able to step in, and then the buyers put up a fight, and then that itself will give me most likely a higher confirmation. So putting those pieces together are extremely important, guys. It's not just opening up time and sales in level 2 and saying, all right, the stock is going to go up here. All right, the stock is going to go down. That's not enough. You need more. And needing more is understanding the full chart, understanding critical levels, understanding who's in control. Is it buyers? Is it sellers? What is happening? And taking the trade from there. Right. Now, these are some key notes about tape reading that I want you guys to understand. Now, level 2 tells lies because the vast market size is hidden from the public. Now, like I mentioned, level 2 is great, but you're not going to see the actual size on level 2. So if you go to level 2 and you see someone wants to buy 100 shares, 100, don't say, wow, there's no buyers. Wow, there's a lot of sellers. No, I don't care about the numbers. The numbers on the quantity do not matter, because market makers are always hiding size. They're not going to go on level 2 and say, hey, we want to buy 50,000 shares of Apple right now. or we want to sell 100,000 shares of Apple right now. So a lot of the size is hidden, right? So you need to keep that in mind. Next, market insiders push prices towards support and resistance to test the waters. This triggers the stops and to see how much interest they can generate with the public. So obviously, like I mentioned, market makers study us. They study retail traders. They know that if they see something like this, retail traders are going to buy. So what they do around here is they push the stock price up, and you can see this on the tape. So when they push the stock price up and you can properly read the tape, you will be able to avoid false breakouts. So what happens here with a lot of retail traders is they go, oh, it's breaking the resistance level of 110. It's time for me to buy. They jump in, order flow goes higher, transactions hit, they're aggressive, and then right when that order of retail traders die out, which is not after a few seconds, maybe a minute, boom. And people get trapped. Market makers are making their money by trapping. That's why reading the tape at these critical levels is extremely important, because market makers understand that, we're trading off support, we're trading off resistance. And as I mentioned, guys, just a little bit common sense. Trading is not as simple as buying right here, right? It's understanding that, okay, if I have two trades that are breakouts, and we're going to cover breakouts in the next lesson, if I have two trades that are breakouts, right, which breakout is a stronger breakout? Which breakout allows me to get in now? Okay, this one may say get in here. This one may tell me to wait for a pullback. Right? So it's our job to identify that. It's not as simple as, oh, it broke out of the 110 area, we should buy, right? Not that simple. Next, filter the tape's message through the market's movement. Now, obviously, if you're trading larger names like Apple, Amazon, Microsoft, if you're trading large names, and I cover this in part 8, you need to look at the overall market. Now, obviously, if you're trading penny stocks, smaller name mid-sized stocks, not really going to move with the market if there's a huge catalyst or event that's driving the stock up or down. But if you're trading the big names, you have to look at the market, right? If SPY, or the market, let's call it for now, and I'll cover SPY and ES and everything later on, let's say the overall market right now is going up, right? The overall market is going up. It's breaking a resistance point. Apple is at a resistance point and breaking that. That will obviously give us more context. But now if they're reversed, market's going up, Apple is going down, that's where it kind of gets confusing. So looking at the overall market movement and combining that, especially with the bigger name stocks, if you're day trading or scalping, allows you to capture bigger moves, right? Next, rapid burst of activity on the tape reveal greed and fear under the surface. This showcases where other traders are committing to the market or getting out in disgust. So basically, let's say you see on the tape, right, stock breaks this level, 110, right, and the moment it breaks it, you see a bunch of orders just go through, and it pushes the stock down very aggressively. A lot of people at times get in here. Now, there are trades that I get in here myself, but there are trades that I don't get in here, right? The reason I don't get in here is because sometimes what happens is these are all triggering the tape very, very fast, right? Because there's stop losses here, guys. People are exiting. People saw this 110 level. They see it got to 109. They're scared. They're exiting. The tape is hitting all of their orders, and you can see it on the tape. And then once it gets hit, it does that. And I'm pretty sure you guys have seen plays that, or a candle that looks like this. That's the candle that's sucking out all the traders, right? So when you see a burst of activity on the tape, like orders just going in, orders just going down, that represents greed or fear. It's showing that people are either committing or getting out. So putting those together are very, very important, because if that's happening in, let's say at a support level, you see that the tape just starts going crazy. This rapid burst of activity. It keeps hitting the ask, nice size. That's showcasing that people are committing here. Right, so looking at that is showing that, okay, there's a lot of people committing. Now, if it goes down and you see it hits the tape, right, at moment people are getting out of disgust, people are scared, people are fearful, and that may not last long because the person or the company or an institution or whatever the case may be getting out here, they drove the price down and then it recovers. So you need to be able to look at the context. You need to be able to look at what's overall happening and kind of take it from there. And like I mentioned, I have a lot of live trades and a lot of trades that I walk you guys through showing these activities in one of the upcoming lessons and one of the upcoming parts that is going to put these pieces together. So if you feel confused or like, oh my God, what do I do? I am going to give you guys exercise to, understand this. I don't expect you guys to understand tape reading in one day or 1 week or even 1 month. It takes a lot of time, a lot of practice, and there's a lot of things you have to do to actually get better at it. And like I mentioned, I have videos in the upcoming parts that will showcase everything on how to read it, me even trading live, reading the tape, and I have a video in this part, this lesson as well. It's coming soon. It's gonna come in 5-10 minutes. Watch that video too. It's gonna break everything down, and just understanding is very, very important. So if you're confused, guys, don't worry. Just stick through everything, and I promise it's gonna click as we keep progressing over and over again. Right now, a few more things. Now, next thing to look at is look for nervous prints above the ask during breakouts, which showcases false breakouts, or look for desperate prints below the bid during breakdowns, which showcases false breakdowns. So what does that mean? Like I just mentioned, sometimes when a stock breaks resistance, you see a lot of orders executing on the time sales, just going through very, very fast, which are showcasing that this may possibly go up. That at times is people wanting to get in, people chasing. It's not strong movements. Not all the time, but most of the time it's false movements. So your job is to read that, wait for the pullback, read on the pullback, see the bid holding, see that the buyers are there, see that the buyers are being aggressive. And then if you see that the buyers are being aggressive, boom, 100% right there. That's giving you an extreme high probability. Boom, get in, right? Same thing on the downside. Sometimes the stock breaks, retraces, and comes down. And this can all be seen on the tape. And when you guys are reading this, use the 1 or the 5 minute in combination. I'll show you guys that too in a bit. Next, focus on the tape only when price reaches critical levels. Like I mentioned, you cannot read the tape in here. You need to read it when it gets to critical levels where you know where sellers and buyers are sitting to be able to read who is in control. And then finally, most volume comes from scalpers who push prices in both directions by pennies. So it's your job to find the whales beneath that. You have to understand when you see prices fluctuate up or down like this, that's scalpers getting in or getting out, and they're driving the price up or down, and that's where you guys see the tape kicking in. All right, so now I'm going to go over to a trade that I took, and I'm going to walk you through on reading the tape so you guys can actually see it happening in live and see how I got in before and what I read. So when you guys actually go to your charts and you go to your screens, you can actually look for a similar setup, a similar trade, and kind of apply that concept there as well. All right, so here we're looking at stock Apple. I'm going to show you a live trade that I took with Apple. The first trade wasn't the best. I got out too early. The second trade was good. I left some money on the table, but overall, solid day. I was up $1,000 for the day, $1,000 in the overall trade within about 9 minutes. So let's jump right into it. So right here, I'm looking at stock Apple. You guys can see what's happening. So Apple is going right into support. You can see this is NQ. This is the market. The market is kind of trading very, very sideways. It's 9:41 a.m. It's 11 minutes into the market. Okay, so right now what I'm looking to see is I'm reading the tape here, trying to see if sellers are more aggressive, if buyers are more aggressive, so I can try to scalp options. So I'm scalping options. I'm trading Apple puts, 242.5 puts. Remember, puts, once again, you make money on puts if a stock goes down. So if this goes down, I make money. If the stock goes up, I lose money. That's the whole idea of the puts. These are the premiums. If I want to buy, if I want to sell, and this is the stock I'm trading, Apple. I have the 1 minute chart, what I'm trading off, and I have the 15-minute chart. Usually I have the 1 and 5, but I have the 1 and 15 open here just so I can see the levels a little bit better. So once again, I'm watching the market. I have Apple, a smaller time frame, 1 minute, and I have a little higher time frame, and then I am looking at the premiums. Okay. Now the whole idea is when you're trading, you need to know what type of trader you are, or what type of trading you're doing. I understand that I'm scalping. I understand that I'm going to be in the trade for a minute, 2 minutes, maybe 5 minutes, but for a very short period of time, I'm trying to capture a quick move down, and I'm trying to get in and get out. So that's my game plan. So having that game plan right off the bat, I'm not going to get in and then end up holding for 2 days or 3 days, especially if I'm trading weekly expiration options. Okay, now let's take a look on what happens. So I take my first entry around here. So right now I have 30 contracts. Let me show you guys where I executed the trade. I execute the trade right here. So if you guys take a look, I execute 30 contracts, right, at 107. That's my first entry. I execute 30 contracts. Now I'm using the active trader to get in or get out of my calls or puts, right? So I got in 30 contracts, and as I got in 30 contracts, you can see how Apple starts moving. Apple starts moving in my direction, but as it's moving in my direction, this level is holding. Now, the thing I didn't like about this trade, the thing that didn't allow me to hold through it, was one, that it was holding right on support. You can see 242.90s. And B, the market wasn't really moving in any direction. The market was too choppy. So what I would like to personally see is I like to see the market go in a certain direction that allows me to take on the trade. So this entry personally was way too early. Okay. Now, progressing from this entry and going forward, right, you guys can see what tends to happen. So I still have my 30 contracts. You guys can see right there, I still have my 30 contracts. Now, one thing I want you guys to understand when you're trading on the minute chart is a lot of times you get fake outs. So you see this green candle, right? This green candle fakes out a lot of people. Now, when I see a green candle on this situation, I want to see two things. The two things I want to see is, number one, the time. Right, we're 26 seconds in. We still have 34 seconds to go until the candle closes. For some time, the candle may look phenomenal, but at times, once the market has ended, once the play has completed, the candle actually looks like a very weak candle. So at this point, my focus is on the tape, and my focus is on level 2 here. And I'm also obviously watching the market alongside. So right now, I can see that the market is holding. The market is not giving us any direction. I see Apple is trying to pick up a little bit, and as Apple is trying to pick up, my focus kicks in right here. Now, as my focus kicks in right here, I can see that there's not that much crazy aggressive buying. There's a burst of orders going through that's making this skyrocket, right? There's a burst of orders going through, and this is where people panic. If you guys see that, there's a burst of orders going through. This is where a lot of commitment is being made here. Maybe people are exiting their short position, whatever the case may be, but there's a lot of commitment here, and at times this commitment level makes people get scared. Me personally, if I'm trading the 1 minute chart, I see there's still about 30 seconds to go. I'm not going to panic on the first green move up because I understand a lot of times it could be a fake out. So what I'm going to do is I'm going to stay in my position, and I'm going to hold through the course and see what happens. And you can see as we get closer and closer to the closing of the candle, you can see that this is getting rejected. This is getting rejected right at that point. 243.5, it gets rejected right there, right? You can see that nice rejection at 243.5. It gets rejected there pretty nice. As it's getting rejected, you can see the market is slowly drifting away. No real confirmation yet, but the market is slowly drifting away. No real trade at the moment. I still have my 30 contracts, and you guys can see this now gives me somewhat of a confirmation. I get the confirmation that showcases me that at 23.5, there is a lot of sellers sitting there. The sellers are rejecting that point. Since they're rejecting that point, that gave me confirmation, that gave me the confidence to actually add more to my position. So what I did is I increased my 30 contracts to now adding 30 more. So now I have about 60 contracts. You guys can see I'm right there on the bid. My order goes through. I'm in 60 contracts at the moment now. Now my exit point in this trade would be, okay, if I see on the tape that 243.5 is holding, 243.5 is strong, and obviously the market holds, all right, I might possibly get out. But right now, I don't have a reason to get out. But however, on this trade, on my first trade for the day, I kind of made a mistake. I'll show you guys what the mistake is. You can see as we keep progressing, that same level gets hit hard. Every time the stock tries to go up, let's watch the L2 and time and sales. You can see every time it goes up, you can see it gets rejected. Sellers keep stepping in. See it goes up, watch what happens. We have 31s, we have 31s, right? Watch what starts printing on the tape. On the tape, you can see heavy orders are hitting the bid. Heavy orders hit the bid is holding, right? But it's showing that, you can see, it was holding for a quick second, and that's what a lot of people mess up. They think the bid's holding if they see one number, right? What you want to see is you want to see that number hold strong, hold firm. Right now, you can see that the bid's at 27.27. You can see 27's flash, 27's flash. That's showcasing that the sellers are a little bit more aggressive. Buyers aren't there. Buyers aren't strong enough. They're not stepping in as we would want them to step in. So that's allowing me to be comfortable with this trade. Now, as you see, as the stock is pushing down, or it's not getting rejected from that 23.5, I'm watching this level on NQ. I see NQ is trying to slowly recover. Still no direction. Still very, very choppy for the day, right? So I'm still in the trade at the moment. Now, as I'm in the trade, you can see 27s. You can see how this level starts flashing. Now, if you guys notice something, right? Let's notice something right here. You'll notice that every time the ask gets hit, look at the quantity, 2, 3, 60, right? You can see 3. Like every time the ask gets hit, every time the stock is moving up, and I'll show you a more detailed example in the next example. Every time the ask or every time the stock goes up, the quantity is very, very small. It's not a lot of quantity. That quantity is already showing us that this is not a strong play. So far, I'm up $30 on the trade. I have 6 grand invested, right, into the trade. I have a total of 60 contracts. My entry points are right there. So this is the first trade. As the first trade happens and I see the move, I see it's holding. If you guys see right here, I see that the stock is holding. So I'm not comfortable with my position. So what I do sometimes, and even if I'm right or wrong, that's a whole different story. If I'm ever in a trade and I'm not comfortable, and I'll show you why I wasn't comfortable. If I'm not comfortable, I like to either take some off or I get out the trade. So once again, if I'm in a trade, and we'll cover more about this in entries and exit points and trade management. If I'm in a trade and I'm in 60 contracts, right, or 60 shares or whatever the case is, and I'm not as confident as I was when I took the trade, I might take half off. Or sometimes I may just exit. So what scared me in this situation was the fact that Apple is flat, but look at NQ, it starts squeezing, right? Obviously, look at the candle time too, but sometimes there could be some market news, market events that just hits. It may be Trump tweeting that magically makes the market rush. Since I'm scalping, I can't afford to get out when the stock, or if the stock does that. So what I did at this point, I took 30 off, so I only have 30 contracts. I only have technically 30 shares, right? So as we keep progressing, you can see I downsized my position because I was like, okay, if the pop does happen, I'm not comfortable in holding this stock. I'm not comfortable because I am watching the market as well. Now, seeing that and seeing the market push, this is where the confusion came, because a lot of times this usually goes in this direction. So when I saw this push down a little bit, I saw that I'm up on the trade. I see market is pushing up. I'm kind of confused. I'm unsure. And whenever I'm unsure in a trade, like I mentioned, I'd rather be out than force myself to take that trade. So right here is where I exit. So I'll play this part and you guys can see I exit. I make 30 bucks in the trade, nothing crazy. I exit, being in a trade, allowing myself to be in a situation with a high probability, got out. Could have made more money on this if I stayed the course, but I'm okay with that. That's something I'm okay with because I didn't like what I saw. So you guys can see it's still going down. If I stayed in this position, I would have cleared about 20% on my overall position, and that would have been, a solid amount of money on that trade. I would have been up about 20%, 22%. I'm okay. I'm okay because I understand I didn't like the setup. Now, as we progress, you guys can see this was not the best trade. Now, what tends to happen here, right? You can see I'm up 30 bucks on this trade. One trade, it could have been up a lot more. Easy 20 to 23 cents, 20 to 23% on the trade. Now, if you notice something, this is what I see now. I see that this is going lower. It's breaking the support level, and this is obviously holding. Now, when I see that, or I see a stock break a certain point, I understand the mechanisms of traps, which we're going to cover in one of the upcoming videos. What happens in the mechanisms of traps is people get trapped in these positions because they think, okay, it broke my support level, it's going to keep going down. No, you have to look at the overall market. You have to look at the overall play. Market is going up, market is holding, market is strong, it breaks this level, retail traders enter, smart money is exiting, people are getting trapped. I understand the trap concept. So what I'm waiting for at this point is I'm waiting for this to bounce, right? Shake people out, and then maybe a continuation alongside with the market getting rejected at a critical level. So I start watching for that. As we start progressing, you can see what happens with the overall market, right? You see overall market starts pushing down, gets very, very choppy. Apple goes up, right to 23.5, gets rejected. That rejection gave me a confirmation to now most likely add to my position or add some puts. So I go in, I'm trying to get into the trade, having a very difficult time, and you guys can see right here I get in 30 contracts. So once again, I get in 30 contracts, I pay a higher premium. I'm totally okay. I own 30 contracts at the moment. I'm in the trade. I see that I see that NQ is trying to break this critical level. NQ trying to break that critical level is giving me high confirmation that Apple may possibly dump too. So I'm in 30 contracts at the moment. As I'm in 30 contracts, I'm watching Apple to dump. Now watching this, let's look at time and sales real quick. Let's look right here. The 243s. If you guys see the 243s, look what happens at the 243s, okay? Pay very close attention here. 243s, look at the flashes. Look at the flashes. 243, right? Let me show this for a quick second. Look right here. Look at the bid, 98, 98, 97. Watch what happens here real quick. That gets hit with a little bit size, nothing crazy. And then look at the bid. Bid decreases, right? The ask also decreases. So the ask is now representing that, and the buyers are stepping down. Yes, we see quantity, but like I said, we don't care about quantity, guys. The size doesn't matter on the level 2 because that's where people get faked out. People think, oh, there's a lot of shares here, not a lot of shares here. Let me get into the trade. It looks like it's going to bounce. No, like that's the wrong way to look at it, right? I care about the tape. I care about what's actually happening. I don't care about what people are putting on the front. I don't care what people are showing. I don't care if people are showing like, hey, I want to buy 20 million shares at 242. No, are you buying them? Are you actually executing? If you're not executing and it's not here, I don't care, okay? So I'm watching this, and you can see at this point, I add 30 more. When that confirmation kicks in, I'm adding 30 more, so now I have a total of 60 contracts on this trade. Having 60 contracts, I'm now confident to be able to do that. Now, what's giving me that confidence? I see this goes down. I see that goes down. I see sellers are aggressive, right? Look, you can see 96 is getting hit. 96 is getting hit. There's some size there. A lot of orders pushing down. And look at NQ. NQ is also pushing down. Market looks strong on the downside. So this looks like it could potentially dump. So at this point, you can see what happens again. Let's look at this right here. Take a look at this point. Watch the 92s get hit. Watch that. 92s get hit. The bid drops to 90s. So the bid is dropping. As I showed you in the beginning of the video, the bid is dropping. As the bid is dropping, guys, and sellers are hitting the bid, and the bid keeps dropping, that showcases sellers are extremely aggressive. Seeing that is giving me a higher confirmation. Look at that. 85, size. And then when it picks up a little bit, it's nothing crazy. Right? And look at this. Look at the spread. The spread is going on the downside, not the upside. Market is still pushing down. I have a total of 60 contracts. Okay? So at this point, I'm still in the trade. Trade keeps pushing down. Time and sales looks very, very weak. Sellers are in control. I'm up about $300 on the trade, as you guys can see right here. I have a total of $7,000 invested into this one trade. So I have $7,200 invested, right? I have 60 contracts. And you can see it breaks that level. I take 30 off. So at this point, I'm taking some off. I'm taking a little bit off the table. Now, yes, I could have held 110%, but what I did not like this day, I did not like that from the open, the market was extremely choppy. It was extremely all over the place. So that didn't give me confirmation. Now, there are days where I would trade and the market is less volatile. It's giving a little bit more direction, and it doesn't make me take size off immediately. I took size off because I wanted to offset some risk initially. So I took 30 contracts off, I locked in some profits, and I'm writing my other 30 contracts in. Why? Because if this was to, let's say, reverse at this low, I would technically walk out with this trade without really losing money and without really making money either, which I'm okay with, okay? Now, if I held and it reversed hard, I would probably take a loss. So that 30 contracts that I took off is kind of my insurance to give me confidence to stay in this trade for a little bit longer time. And you can see this keeps dumping, that keeps dumping, bid drops heavy. Now aggressively keeps dropping. Now, there's something else I want you guys to notice. Now, see how the bid drops? It goes to 79s, 78s, and then it rushes to 80. That's the quick moves that happen up or down that people chase. People think, oh, I see green, I'm going to get in. No, people are probably just exiting, forcefully getting out of that play. They may be scared or whatever the case is, and you can see it keeps pushing down. Now it's at a critical level once again. Now the critical level that you guys have to understand in this, and once again, we're scalping, and as we progress, I'm going to show you guys different strategies, but this one, I'm scalping the trade. Stock makes a huge move down. It's obviously going to take a break. I'm still holding 30 contracts. This is at a critical level, same low of the day. So I want to see if I can break that low of the day or not. If it pushes through, cool. If not, I am out of my position. So seeing that, you can see it's having a hard time. It's obviously going to react to the overall market. I'm up about $480 for the day, 240 on my open position. And you can see what tends to happen. It's holding for a little bit. Candle still hasn't closed. We still have a few seconds to go. It pushes down. This also makes a new low of the day. You can see new low of the day. And as it makes a new low of the day, I'm up about 630 for the day. Keeps pushing, keeps pushing. Sellers are extremely aggressive, very aggressive. It breaks a critical level. It's giving me a lot of confirmation. It's giving me a strong amount of confirmation that it's going to keep dumping. And you can see, keeps breaking, and then boom. So far, I'm up $1,000 now. Keeps going, and then when it goes and holds at this point, I'm in the trade and I'm up over 10%. I'm up, I think, 15%, 20%. I invested $7 grand. I'm up $1,000. I'm happy with the trade, right? At that point, the risk reward ratio is amazing for me. I put in $7 grand in a matter of a few minutes. I'm up 1,000. I'm gonna take my profit. Yes, could I have stayed in longer and made 2,000 or 3,000? Could I have held my full position of 60 contracts? If I held my full position of 60 contracts, I would have probably even made $2,500. I would have made 25%. But like I said, it's all about trade management. It's all about how you feel about the trade. If you're less confident, you take some size off. If you're more confident, you add size. What's the market structure? All these things play a role. So at this trade, you can see I take off my last trade at 143. I take it off. I'm up $1,050 for the day, over 10%. It keeps going down. It keeps pushing. You can see it keeps pushing down. Yes, if I stayed in, I could have maybe made a little bit more. Whatever the case is, you can see I could have made, X more, right? But that doesn't matter. I can't sit here and say, guys, if I stayed in, I would have made $3 grand. Oh my God, that's where the psychology part kicks in. No, I'm happy with the trade. I got in. My plan was to make about 10%. I did my 10%. I made way over 10%. I'm happy. I can't go back to this trade and say, oh, if I held my 60 contracts right now, oh man, I would have been up like $4 grand. Oh man, no, that messes up my next trade. So that's the trade with Apple. You guys can see what I used here is legitimately just using the market structure. Looked at Apple stock with level 2 and time to close, which showcased that buyers are not strong, sellers are more aggressive. As sellers are more aggressive, that's giving me a high confirmation to take on a play. And obviously, I'm also following market structure, and my game plan is, hey, enter depending on what my trading style is. My trading style is to scalp or day trade, hold for a few minutes to a few seconds. That's what I did. My original entry right here was phenomenal as well, but I exited because I wasn't as comfortable. And like I said, if you get into a trade, guys, and you're not comfortable and you get out early, it happens. It's going to happen, but you need to live with it. I live with it because I am the one that pulled the trigger. I understand the consequences on the upside and the downside, and that needs to be accepted. So this is the Apple trade, once again, using time and sales and level 2. All right, guys, so that's the Apple trade, as I mentioned. And I'm going to, moving forward, as you guys watch more and more videos, I'm going to show you more examples of using L2 and time and sales, especially in the mechanisms of traps, which is in one of the upcoming lessons. I'm going to show you another example in that video, but in that example, I'm going to show you the actual time and sales moving, showing you the actual numbers. In here, I know it was a little bit quick, but I just want you to understand the concept, see the concept before I dive more into the actual reading the tape, right? Because in this whole idea, it's just understanding the market structure, understanding the trade, and then applying reading the tape, applying on reading time and sales, right? But if that's not being done, or if you don't understand that, I can't jump right into reading the tape. So in the upcoming videos, I am going to show you more examples of me taking live trades, buying, selling, and showing you how to read it, but in more depth. Now, what I want you guys to understand is reading the tape is not going to happen overnight. It is going to take a lot and a lot of time and a lot of practice as we progress through this course. I'm going to give you guys exercises and assignments. So the whole idea is to do those exercises and assignments because they are going to allow you to get better at this. But you need to be patient and understand that this takes weeks to even months at times for you to understand it.